All right. Well, good afternoon, everyone, and welcome to our monthly webcast. And this is our continued series, the webinar series of The Road Ahead, looking ahead towards a meaningful and effective change in response to COVID-19, the pandemic, giving you the tools and information you need to successfully navigate the future. Today, I'm joined by two special guests, Don and Bill from Legal & General. Don Boitnott is the Vice President and Chief Underwriter at Legal & General. Bill Skelton is Underwriting Manager at Legal & General. Don and Bill, welcome. Good to have you with us.
Thank you.
Thanks.
All right. Well, at DBS, we have a lot of carriers that we work with, and I'm sure many of the people online are familiar with Legal & General, but for those that aren't as familiar, Don, can you just give us a little bit of a background of who is Legal & General?
Yeah, happy to. So Legal & General, we've been making commitments to customers and keeping them for over 70 years. Legal & General America continues to back our market-leading competitive position and solid operating performance with exceptional financial strength from 3 of the world's top rating agencies. Our long history demonstrates our experience in every kind of economic culture, including the one we're currently in. We're top 10 of global insurers, 180 years of history, top 5 provider of term life insurance in the US, issuing more than 57 million in coverage back in 2019. And we have a little over 1.3 million customers with 760 billion in coverage in force and a little over 5 billion in assets by the end of 2019.
That's impressive. That's impressive. Now, I put up the next slide because my hunch is there are people out there that know you as either William Penn or Banner Life. Can you give a little bit of an insight? Why the different companies?
Yeah, and I appreciate that because I had the same question in the industry. I've been in the industry 20 years, and so I had the same thought. Banner is in 49 states, including DC, and William Penn is only in the state of New York. So New York has historically been on the forefront of regulations, unfortunately. Frankly, some quite strict. So with the heavy population with lives in New York, though, we need to provide insurance to them. So for the ease of doing business, New York has been separated out, making it easier to comply with their regulations while allowing the other 49 states to have a little more freedom. And this is important when we are now exploring a lot of innovation and technology advances.
That makes sense. So you've got really 2 papers. You've got Banner, which a lot of people on this call use outside of New York. And for any of our guests that are with us today, they're using William Penn. That makes sense. And the whole works is owned by Legal & General. All right, well, let's pause then. I want to properly introduce our 2 guests today. So Don Boitnott, you've just recently joined Legal & General as the Chief Underwriter and Underwriting Transformation Officer. And prior to that, as you mentioned, you've been in the business for about 2 decades. Previously at SCORE, where you oversaw automated underwriting, the rules engine. You're responsible for oversight of underwriting rules and new data sources, as well as maintenance and increased efficiency around the engine. And prior to that, you had experience at Shenandoah Life and AIG. I'm very excited to have somebody with such a deep reinsurance background now coming into the retail space join us today. Welcome, Don.
Thank you very much. I appreciate that.
Yeah, and Bill is a veteran with well over 2 decades with Legal & General. Started at William Penn over in the New York office and moved from underwriting department to actuarial about a year ago. And now he heads up underwriting rules for the digital platform. And he managed a team which is part of the App Assist program and has been a team lead. Bill, we're glad to have you with us as well today.
Thank you very much. Nice to be here.
Absolutely. All right, well, let's jump in. And Don, as the newcomer, I'm going to let you kind of start. Talk to us a little bit about the impact that COVID is having on the life insurance industry.
That's really a can of worms, isn't it?
Yeah, it is.
How has it not affected us? But I mean, I think in general, what what happened was it made all the studies and analysis and contemplations of how to become more digital go live practically overnight. And what I mean by that is a lot of carriers were in a wait and see or sandbox testing phase. When COVID hit, it forced some that were pausing because really of internal uncertainties to flip the switch. And so I don't know if this crowd knows a lot about exam one, but when you go get your blood drawn, it gets sent to Quest, which is associated with exam one, and exam one then it collects that information. And so all of your blood work just from like your well person visit is actually in a database somewhere. So this is an interesting data source. It's not a one-to-one for what insurance typically gathers when they're doing their analysis, but we have a lot of carriers that didn't want to send applicants out to have their blood drawn and have that contact with another person, just being very cognizant of the situation that we were in. So exam one had 50 clients go live in production with their product within weeks. That's really a major catalyst. Big market shift, as you can tell. So, in addition, there's been a shift to electronic applications. Agents over the years have been kind of reluctant, not all of them, but some have been reluctant to really go to the electronic platform, and they were digging their heels into that paper process that felt so familiar and had that personal touch to it, of course, but that shifted very much overnight because you couldn't have that personal contact anymore. EHR is an example. That's electronic health records. Bill will discuss that later. And then another really large impact was the expansion of accelerated underwriting programs. And that's basically what that is a platform with rules that emulate what an underwriter does using technology and instantly available data for a quick decision. So a lot of carriers expanded the ages that would benefit from this program and expanded the face amounts that would benefit from this program. So, we're going to see the analysis of that if that's something that sticks around, because now you've got maybe an experience that they weren't really prepped for from a pricing perspective. So that might be something that actually rewinds. I think a lot of the instantly available data will stick around.
Yeah, my hunch is, as we've heard in many webcasts and articles and things, is that we're never, any of us, no matter what we do for a living, we're never going back to what it, quote, was, but we're probably going to take what is best that we've learned and take that forward to make us even better, which is kind of exciting when you think about it. Now, one thing I'm wondering, Don, you bring a very unique perspective. You were at the reinsurer at the time the pandemic hit the country, and now you're at a carrier at a retail level. What's the difference between how you saw those two parts of our industry handle the pandemic?
That's a great question. From the reinsurance perspective, we saw differing responses from the carriers. So we kind of had an advantage of this bird's eye view. Most carriers wanted to know what each other were doing, because I think there was a lot of question marks out there. So across the industry, there was an obvious alignment demonstrating that carriers are trying very hard to find that balance between risk assessment and mortality impact while providing the coverage to families and helping the field place policies. So we tried to really partner with them in every way we could, and the uncertain risk that obviously was going to occur during this pandemic. So we also felt a strong obligation to model and research everything we could from that perspective as well. The difference shifting over to the carrier level is the execution. So at the carrier level, we can listen and receive guidance from reinsurers, but the implementation is solely ours to own, and that's a larger lift.
Yeah, for sure. Well, thank you for that perspective. I'm going to switch gears and turn the mic over to Bill. Bill, talk about how COVID is really going to impact a client's ability to qualify for life insurance. What's your perspective on that?
Well, obviously, there's we look at different things. Your comorbidities If someone actually contracted the illness, how severe was it? If they were exposed, when they were exposed, are they going to travel? And those are all areas we have to look at. The big comorbidities, any kind of stroke history, diabetes, obviously, if you have an underlying respiratory illness, COPD, asthma, or if you have autoimmune disorders and you're on immunosuppression, obviously you're at a much greater risk for getting COVID. As far as someone who has had it, again, we look at the course of the disease and where they are in the recovery process. Were they someone who tested positive just because they were exposed to it and got tested and they're positive, but they never really had any symptoms? Or is this someone who got hospitalized and was on a ventilator and postpone accordingly, or proceed accordingly if they fully recovered and they've been quarantined and they've fulfilled the CDC's requirements of the the quarantine period? We can go ahead and consider someone who was mild and has fully recovered.
Bill, I think that's an important point. So I don't know about you, but I think in my head, I know several people that have been diagnosed with COVID, and I luckily don't know anybody that has had a severe case. And so once they get past the quarantine and they're fairly okay, seemingly okay, that doesn't block them from getting life insurance. There's still a chance they could apply.
Correct. So we kind of look at the same guidelines that the CDC gives as to when you can return to work, when your kid could return to school. And if you're good, then you're good.
I think that's a bit of a relief I would think, for a lot of people, because there's so much unknown. And I think what we've heard in a lot of the previous webcasts we've held is that the need for life insurance has never been at a higher point. People are so aware, and applications for life insurance at an all-time high. People are really protecting against those ifs, if something would happen. And just because they happen to test positive, that doesn't mean they're out of luck. They still may be able to get there.
Correct. And our postpone period can be as short as 3 months for someone who's actively being treated, to up to over a year if someone obviously was hospitalized.
Okay. So even after a year, if somebody is back on their feet again, that we could still open the case up again.
We could consider it, sure.
Yeah, that's interesting. Okay, Don, anything you want to add to that question?
Yeah, I think I'd like to point out the secondary effect we've heard of, and you've probably heard of it in your own world and likely on the news. But this is regarding medical testing needed but not yet able to be performed, or there has been a backlog of medical testing because facilities were shut down for quite a bit. And this can include everything from an annual mammogram all the way through to a CT for a previous cancer diagnosis. Someone who's in remission but needs this to validate the remission. So every one of these scenarios are different, and we can definitely allow some of them, while others we cannot. So just something to keep in mind when you're discussing with your client.
Well, and I think that's a good point. And the other thing I think that points to is, if somebody who is with us today or watching the recording of this thinks about a case, that's one of the reasons why you would get a hold of a DBS, and we'd put you in touch with our underwriting department to say, okay, these are the things we need to understand before we would take it to a banner and have them look at it. And that's some of the kind of the in-depth analysis we can do to kind of help you so you don't have those gotchas, right? That's what we want to watch out for with your client.
Yes.
All right, let's, so Bill, I'm going to come back to you again, and technology, specifically around data. And it's all improved the insurance process and can make underwriting easier. Talk about the data points and how they're used in the insurance industry.
We use the ones you probably are all well aware of, MIB, obviously, Milliman for their RX check. It's a database of of any medication that the person has been prescribed. Sometimes they go back 15 years. Really deep source of information. MVRs, criminal record checks, electronic health records, LexisNexis, which I know a lot of people, that's a scary, nebulous term, and it shouldn't be. One thing I think a lot of people think is that a LexisNexis score is the same as a credit check, and it's a hit on your credit. It is not. So you can assail some worries there that it is not a hit on your credit, and so go ahead and go get your mortgage.
Yeah, so two things to underline there. I think the one thing that stood out to me when you and I were talking about this, preparing for this meeting, is the fact that RX check. So that's your prescription check. So if you have a client that, quote, forgot about a medication they took a few years back, you would still see that. You'd still be able to see that through the RX check, correct?
Correct. There are some gaps. For example, if you go to a little mom and pop pharmacy instead of a CVS, sometimes that information is just not going to show up because they don't participate in the database.
Got it.
But by and large, yes, you will see something. And generally speaking, when people forget, it's a legitimate, they took a medication once 3 years ago. Obviously, you're not going to remember every prescription you got for a sinus infection.
Yeah, correct. So it isn't always mischievous. It might be just it could be just an honest mistake. Yeah, for sure.
Absolutely. Yeah.
And then with LexisNexis, I think it's really important to point out that, hey, it's not gonna be a credit score ding. It's just simply another way for you to gather the information. It's okay, go get your mortgage, whatever. It's not going to screw you up, right?
Correct.
Yeah. Now, Don, in your previous position, you were deeply involved in designing specific data points and making changes that could affect the quote score. Can you talk a little bit about some of the things you learned as it relates to this topic?
Yeah, certainly. So yeah, exactly. For 5 years, I was at Score Global Life and worked solely on the underwriting engine from the reinsurance perspective, which we really were a vendor to multiple carriers. So it was interesting to see not only the data itself, but how the data was used differently. So I was heavily involved in building the rules around instantly available data. One thing I learned was, every carrier has the same opportunity to order and receive the instantly available data, but when it comes back to us, we're all kind of using it slightly different. So I think one thing I always kept in mind is it's incredibly important to understand the data, but and how it's structured, how it can be even changed or reconfigured before it gets to me. But what I think I took very seriously is not to leave any opportunities on the table, to extract every bit of value out of the data and use it efficiently. So it's very easy to stop at the top layer of a prescription. Just like Bill said, it could be used for various reasons. There's so many other factors attached to the prescription, so ignoring one point can change the definition of that. And so the majority of carriers, other than the application questions, they're using prescription data, motor vehicle, it might be criminal history, clinical lab, and each can be ordered through a connection with the carrier and instant data received back. The carrier can then use the information to make real-time decisions. So going back to Bill talking about prescription data, it's incredibly interesting that at Legal in General, our RX hit rate is around 95%. So that means out of 100 clients, 95% of them will have some kind of prescription profile.
Wow.
That can be, it's a huge amount. So it's a very valid and valuable data source for us to go out and ping and get the information back. Within that data source, we can look at the prescription, the date it was filled, the number of fills, the dosage of the prescription, how many were prescribed, and even the prescribing physician. So as you can imagine, any one of those might change the face of that drug. And so there's actually logic to automate all of this and make some conclusions.
Yeah, absolutely. That's so interesting, and it probably makes us in the end I shouldn't say us, going back to my carrier brain, it makes the carriers better at underwriting and allows you to be more aggressive where it makes sense rather than you're using data. It's data-driven decision making, which is more than just gut decision making, which I think makes us better as an industry.
Yeah.
Absolutely. Great. Absolutely. All right, well, let's switch now. Bill, earlier it was mentioned using electronic health records for underwriting. And if I understand it right, Legal in General is utilizing that. Tell me a little bit about what you're doing with this.
We use it in two different ways, both for the possibility of exam substitution or a fluidless possibility, and for APS substitution. And currently, what we're doing now is when we have, we deem an APS is necessary, or we order a concurrent APS and electronic health record. Typically, electronic health records are received back in, they say 48 to 72 hours. Sometimes they could literally come back in minutes.
Wow.
Obviously,
That's
that's going to cut your cycle time.
Mm-hmm.
The underwriter can review the record, the electronic health record, and determine, is this sufficient, or is this a case where we really do need the full APS?
Mm-hmm.
Electronic health records are still in their infancy. They're not as good in general as an APS, but they are improving, and there's plenty of times we can use them. We also, if the electronic health record has blood pressure build and a lab, a full blood panel within the last 18 months, we can use that in lieu of a paramed exam and blood.
Wow, that's helpful. So I'm going to take a question that I just love this, because we have one of our listeners. He's very loyal. I see him on almost, I think, all, if not most all of our webcasts. So he actually sent a question on a Monday. And so thank you, Chuck, for doing that. It says, please ask if we're going to start seeing a dramatic decline in APS delivery times. My understanding, that's the largest constraint on time processing on an app. With 85% medical records being digitized, that should really allow for some type of digital connection between the carrier and the physician's office. It feels that kind of goes hand in hand with what we're talking about here, Bill. And do you think that this is going to help reduce the cycle time that the advisors are really suffering with right now because of just because it takes so long to get APSs?
I think it already has to some extent, especially on the APSs that are purely an age and amount requirement. A healthier, younger person. The EHR is generally, or frequently, I should say, sufficient to continue as is. Obviously, the EHR is not going to be sufficient for a 75-year-old who's had a stroke and diabetes.
Yeah.
So we have to approach it realistically. But I think this will definitely lower cycle time. Part of the reason we do is so that if the EHR is insufficient, we haven't wasted that 2 to 4 days waiting for the EHR before we ordered the APS. We'll just cancel the APS order and proceed.
I think that's great news. I mean, I remember as an agent tracking down APSs, driving to clinics, all sorts of. This is a breath of fresh air, and I agree with the continued comment that Chuck made. He says, this really can position DBS very competitively because of all the technology investment that you've made in the entire cycle process, and I would agree with that. I'm going to pause here just for a second, because now we should have everybody on the line that's going to join us today. If you have a question that you want to make known to either Don or Bill or myself, simply go to the Teams app and go to the comment area and just drop a comment. I'll see it. That's why I keep looking down, because I have my phone open so I can see comments as they come in, and I'll just ask our guests as it flows into our conversation. All right, Bill, I'm not going to let you out of the hot seat quite yet. I want to talk a little bit more about this electronic health records. And from what I was reading, there's a lot of different types, and I don't even know what these all mean. Can you just kind of help us understand the different types of these electronic health records?
There's two general types that we're using. One is a portal based, and the other is basically driven. I'll focus on the HIPAA one first. Those could be, we use 3 different ones. Wamba, who is parameds.com's EHR product, Claretto, and MIB has an EHR product that uses the existing HIPAA. Basically, it's ordered exactly the same way as an APS, so it's a fairly transparent process. And your broker, your client isn't going to realize the difference between that and APS. The other human API is the one that uses a portal-based system. That is one where someone actually has to give the credentials for their patient portal that they have with their doctor. I'm sure many of you have those. And Human API can go in, pull your records or pull the information from your portal and send them to us. And just because that comes up a lot of people get concerned about that. The access to the portal is limited. It drops off after, I believe it's 5 days, might be 7 days. So it's not like we have access to their patient portal forever and ever.
But when an advisor hears something like, we're going to move forward with a human API, that is going to require some, as you said, some customer participation. They're going to have to get engaged for this to work. But the benefit is the underwriting is going to go potentially faster if they can allow that to happen.
Correct. And we found that for our home office orders, the HIPAA method works better than the portal.
Okay.
The portal seems to work a bit better when it's a GA ordered, BGA ordered, because the broker then is a little bit more involved and there's a little more hand holding, so to speak, and they can field that question when the PI gets this email saying somebody wants my portal input. Is that okay? It kind of helps their fears a little bit when they can talk to their broker.
Well, I think it's important that people that are listening understand. I mean, you always want to prepare a proposed insured for what the underwriting process is going to look like. And, if there's going to be parameds or whatever it is that has to happen, that just makes it a more successful experience. And so this is just one more step. There's going to be human API, and probably if you're, potentially if you're working with DBS, that's going to be something that we would leverage. Letting them know that, hey, it's going to require you to let them have access to your portal for a short period of time, but that again will help speed things along. That's very helpful, Bill. Thank you.
Sure.
All right, Dawn, let's talk about data points and impact to risk classes, mortality, and influence. How does that influence the underwriting decision overall?
Yeah, I love this slide. So I'm really happy to see this one on here. I actually thought I'd use a real life case scenario. So, that's the disadvantage of not everyone live, because I bet if I said, is everyone familiar with the drug metformin, that everyone would probably, 90% of you would raise your hand. So to set the stage, each drug, everyone's prescription drugs that they get is assigned an NDC code, and that's the National Drug Code, and that comes directly from the FDA. Metformin itself has approximately 1,400 NDCs. And the reason that is because they vary by dose and brand name, some dates that they were actually implemented. So there's a number of factors that goes into that. I won't get too much into that. But it's very complicated. So metformin was introduced into the market as a diabetic medication in 1998. That in itself is complicated enough. So you have type 1 diabetes, you could be using metformin along with insulin. You have type 2 diabetes, you have pre-diabetes, you have gestational diabetes. So you're looking at metformin, you're thinking, wow, I don't know what it's being used for. Well, to complicate the matter even further, as the market grew to understand what metformin could do, it also started to include options to use it for weight loss or infertility. So if I get a metformin hit on the drug profile, I have to have a rules engine and technology that is able to overall look at that risk and understand what's going on behind the scenes. That's really what dictates the amount of premium you're applied for your policy and the amount of premium you're charged. So I have to consider all the possibilities. So how do I do that? Well, I have to look at other drugs that overlap, how long it's been prescribed, is it male, is it female? And an important aspect is, did they admit to any of those conditions on the application? Or am I possibly getting a flag from another data source? So as you can see, it's very complicated. And the last time I looked, there were over 280,000 NDC codes. So there's 280,000 NDC codes out in the world applied to everything from Xanax to lisinopril to hydrochlorothiazide. How do you potentially understand that data enough to build rules off of it? So that's really what the industry's been doing for the last 15, 20 years, is understanding one data source. Now it's becoming, it's got this incredible elevation of data being collected and structured and available to insurance companies. In the last couple of years, there's been criminal history, of course, clinical lab data. Criminal history is an interesting one too, because when you talk about how do data points impact risk class and influence the underwriting decision, well, now I've got two data sources that could potentially overlap if I'm ordering criminal history along with motor vehicle records. I could potentially have a DUI on both of those data sources overlapping the same date, and I have to build the engine in order to understand that that might occur. And that's one nuance. So it can get incredibly interesting. That's the fun part about it.
Yeah. Wow. That's amazing. And I never thought about how one medication could be misinterpreted if you just look at it at the surface. And so you have to use all those various data points to make sure you really understand what risk you're dealing with. That's great. Hey, hang on one second. We got a live question, so I'll throw it to you, Don. I have a client who is a paramedic in a rural area without much instance of COVID. What concerns would underwriting have regarding a first responder?
Bill might be better to answer that one since I'm kind of new, but I wouldn't think much concern at all. Bill, do you have a better answer than I do?
I don't know if it's a better answer. I would say we readily acknowledge that, yes, that person is at a higher risk of contracting it. However, their public good outweighs that, and we would not consider it a hazardous occupation. We would not take any action on that, just based on the fact that they have the potential to be exposed. We all have the potential to be exposed. So, yeah,
that's a good answer. So that person who sent the question, call DBS a call, and we'll work with Legal in General and help you with that case. I think that's the right answer, though. I mean, I could go to the grocery store after this and be exposed, just because there happens to be a spike in our area or something like that. All right, let's switch gears here quick, and we've talked about all of these different ways that people can apply, but I want to talk a little bit about some of the pitfalls that they may have when applying for insurance. And Don, I wonder if maybe you could give a shot at that one.
Yeah, certainly. I think, because of the data points used and gathered, there are no secrets. A carrier can see the prescription drug history, the driving record, even if you hit an application at another carrier, it's important to make sure your clients understand this component in preparation of applying for coverage, and that way they're not surprised, and neither are you. It's also very important to disclose the exact use. So if you can tell me your history and the data ordered supports that, then you can likely get an instant decision. If we have to stop and ask questions or order more data, it can really hinder the customer journey. So we're building the technology to help ensure more people, so more families have the financial security a life insurance policy can bring. The applicant can definitely do their part to disclose their history and make the process more seamless.
Yeah, I mean, go ahead, Bill.
Oh, I didn't have anything.
Oh, okay. I just, we had a little feedback, sorry about that. But I've seen many times people, they get hung up because they either don't completely answer the question, not they're holding anything back, but they just don't thoroughly answer the question, whatever the question may be, or they don't give as much information as they could. And that just slows the whole application underwriting process down dramatically. And so just know that everything's out there. Just be very forthcoming, and then we can have a very good experience for everyone.
And I would like to say that in LGA, we do understand that. We understand that not everyone is a solid historian of something that happened 3 years ago. So I mean, maybe not even 6 months ago. So there is the ability for us to grab the data and then re-ask some maybe more concerning questions to get some clarity. If we can, then instantly decide. If not, we'll go order the more data. But we do understand, we would like to give the customer the opportunity to tell us what's going on rather than, the next level of medical.
That's a good point. And I think that's really been the experience that I've seen working with legal in general, is that you are willing, as I would say the majority of carriers are willing to listen and say, okay, well, tell me really what's going on here and let's better understand it. So I think that's great. Hey, Bill, tell me a little bit about legal in general. You guys have consistently been a front runner in the industry. How are you going to remain a front runner?
I think just by continuing to do what we've been doing. For example, Dawn mentioned earlier that lab database through Exam One. That's a product called Lab Picture. Long before the pandemic in 2019, we had already done a mortality study looking at using that data. Electronic health records, I coincidentally completed that mortality study in January when we were just starting to hear about this respiratory illness in China. So we're already ahead of the curve, I think, compared to some others, and we're just going to keep doing that and recognize ways to make just getting coverage easier. I believe the LIMRA statistics from this year show that 70% of people, respondents, they need coverage, which is up 6% from last year. Let's make it easier for them to get coverage. We have an online application. It's fully digital. It can be done at the PI's leisure. So if, they're getting coverage because they just had a baby and they get up for a 2 a.m. feeding and little one goes right back to sleep and you're wide awake, you can sit down, apply, be underwritten by the rules engine, get a policy, sign it, and pay for it in less than half an hour. Granted, that's a best case scenario. Not everyone's going to have that experience, but it's possible. And we're really excited about that. And
yeah, that's truly amazing. It truly is amazing. I mean, you think how long it used to take to just underwrite a simple $100,000 term case or a $200,000 term case, and it would take weeks. And now, 30 minutes in best case scenario. That is how you guys will continue to stay at the forefront in the industry. And we'll talk in a minute about how we've partnered with you in some of our digital platforms as well.
Yeah.
So,
and I would just like to point out one other thing too. We're on that digital platform. It's not going to happen tomorrow, but we're working on a way to integrate the electronic health records directly into that rules engine. When we get the electronic health record today, it's basically in a PDF format, so it's essentially looks the same as an APS. That data underneath that is data known as CCD, continuity of care document, and that data is stored as either XML or JSON. We're working towards getting that information directly inputted into the rules engine to further increase the number of people that get instant decisions and minimize the underwriters having to look at cases that they don't really need to, so that they can focus on the really complex cases.
Right, that makes a ton of sense. A ton of sense. So your standard run-of-the-mill cases should be able to fly through pretty easily, theoretically, and those that need a little more TLC, then all the smart people at Legal in General can sit down and take a little extra effort on those. I love that approach. So Don, let's wrap up some of our comments here. Talk to me about how Legal in General is really going to help the financial professionals, just like the advisors on the line with us today, really navigate that road ahead.
Yeah, very much one of the reasons why I came to Legal in General. It's definitely our goal here to simplify the life insurance process, make it easier to protect more families. The landscape of life insurance and technology within life insurance continues to evolve at an incredible pace. Our focus is to remain on improving the way life insurance is purchased, making it easier for advisors to help their clients with the protection that they need. And our digital platform, we're offering shorter application times, instant decisions, cycle times, and giving the flexibility for the clients to have a number of ways to apply for and get approved for life insurance.
I think that's fantastic because, the easier we can make it for people to get the coverage they need, the better it will be for not just the DBSs of the world, not just the Legal in Generals of the world, but the whole country will be better off if we can get the amount of coverage increased, because it is such an important financial instrument and so important for risk mitigation. All right, let's just pause for a second. I'm going to flip over and just look at a couple of the DBS. Oh, we got a quick question. Hang on, I'm going to throw this question into both of you. You guys can think about it. When do you expect quick APS access by underwriters so that the app process is significantly reduced? I assume that's the number one delay. That's kind of what we talked about already. Do you have any other thoughts to that, either Bill or Don?
I will add one thing I forgot to say earlier. Human API, the portal-based that I mentioned earlier, is being integrated into our online app so that can go ahead and be ordered in real time, not waiting for an underwriter to review it. Human API has recently completed the pipelines necessary. So if one of your brokers order the records from Human API and wants a copy for file building, they can also choose to have those sent instantaneously to us as well, so that it's not a process of you having to get the records and then you having to send us the records. So those pipelines exist to help speed up the whole process. It's going to be a while before all APSs are truly instantaneous, but 48 to 72 hours is a whole lot better than the 3 to 4 weeks it used to be.
Yeah, no doubt. Thank you. Yeah, 72 hours, and maybe someday even faster once we get the rest of the APSs digitized and in a format that can be pulled into these rules engines. I think that's the key. That's the key for sure. A couple resources that I think are super important related to what we talked about today that we have at DBS. First, the COVID-19 Resource Center continues to be updated. And in here, I think it's important that I just take a second to point out, so we have the electronic solutions, and in the electronic solutions, you're going to see things like the Fast Term platform. The Fast Term platform is our proprietary platform for term insurance. Legal in General is part of that, and a lot of the discussion we had today actually is in support of that platform from the Legal in General perspective. So make sure you take a look at that. And if you have questions, of course, just talk to any of us here at DBS. We'll be happy to help you. Well, in the last 24 hours, there's been a lot going on in Washington, D.C., obviously, and Terry Getman from Advanced Markets continues to update her industry pulse, and also she's watching very closely what's happening in FinSeca. For those who don't remember, that's the old AELU and Gamma that came together. And so how is this change, whatever the changes turn out to be, how is this going to impact our industry? So check out the pulse on the industry and take a look at that. As I talked about just a second ago, Fast Term, IGO, and e-delivery, all things that we partner very closely with carriers such as Legal in General, just to make it easier for you to have a virtual experience with your client and have touchless underwriting and do it in a way that makes your clients feel safe and secure while protecting their families. Things are changing constantly, and you can trust DBS to keep you informed all the time. All right, I just want to take a moment and give a final word to Don and to Bill. First of all, thank you both for joining. This was a very, oh, hang on, I got one more question. What percentage of APS is now 72 hours? APS is not apps.
Well, that's the electronic health record, not the full APS, just right, to be clear. Roughly, depending on which product we're using, anywhere from 40 to 60% come in that quickly.
That's pretty high, really. That's pretty high.
So,
yeah, that's nearly half or more.
So at least you know, when you get them, sometimes they're incomplete, but at least you know what you don't know, and you realize you do need to hold on for that full APS. I think the next step is going to be, since we use so many different carriers or providers of EHRs, is to now determine, okay, this applicant lives in California, I need to go with MIB. This applicant lives in Arkansas, I should go with Claretto, and kind of fine tune it so that we can speed it up even more. Yeah,
that'd be great. Don, any final words from you and from Legal in General?
Yeah, certainly. I definitely wanted to thank everyone for their time and listening today. I don't know that's another negative of not being live in person. I don't know everyone's extent for their engagement with life insurance, but I'm sure it ranges across the board. I'm just thankful that you were interested and wanted to learn more. I will say a few years ago, the insurance industry started to understand the social responsibility aspect of what we do, some more than others. And what I took from those conversations and changed from a profit-driven model to one with more of a social purpose is that we can really make an impact to provide more financial security, find faster and less expensive ways to underwrite, and to bring more people into the fold of life insurance, to give the peace of mind that a policy can bring. So DBS and LGA are prime, and we are here for that. So thanks again for listening. Bill and I very much appreciated your questions.
Absolutely. Yes. Yeah, absolutely. Don, Bill, thank you so much. It was great to have you with us. And I was reminded several times during our conversation why I've been in the sales and marketing role and not in the underwriter and actuarial role. That is for sure. We're all in the right seats in this industry. Hey, next time, folks, I want you to write down on your calendars right now, November 18th at 1 p.m. Central Time. Terry Getman is going to be joining me, and we're going to be talking about the impact of the election and what actually this is going to mean from an estate planning standpoint. from a planning standpoint. How can you help your clients? So make sure you join us on November 18th, 1 o'clock Central Time, to join Terry and myself. Until next time, thanks very much for joining us. Thanks for all you do, and be well and stay safe.